Well, folks, Tesla stock has absolutely been rolling. This stock is now up 107% this year. It's one of the best performing stocks in the entire stock market this year, Tesla stock, okay? So I thought we'd go ahead and react to this video from 23 minutes ago, why Tesla stocks rally, and hear why this gentleman that has an $85 price target on Tesla, yes, you heard me right, $85, that would be down about, let's call it 60%ish, 65%, something like that, from the price right now. We'll hear him talk. We'll want to hear the points he has to make, and I'll react to that and kind of give my opinions and perspectives, okay? And then after that, I want to react to this video. We've turned the corner on the earnings story, which I think is an important subject for the market overall. If you want to understand kind of where the market's headed and whatnot, always look to earnings. So appreciate you guys joining me as always. Thanks so much, folks. 28,300 plus subscribers on the channel. Thank you, everybody. Subscribe to the channel. Also, if you're looking to apply to join my private group, check out the pinned comment down there. Alrighty, guys, let's get into this.
An $85 price target, neutral rating on the company. What's leading to this surge that we've seen lately, Craig?
So there's two things going on. The first, I would call out that, Tesla's obviously, a very successful company in EVs. EVs are inevitable. They created the market, high quality. It's a darling. People want to own it. So any good news, they want to buy a little bit more, and it's a positive trade. It's a momentum trade. Second thing is, and I think people are misreading this, but on June 3rd, we had the announcement that they would future sales of the Model 3 rear-wheel drive vehicles, right, which is their highest volume vehicle, is going to be eligible for $7,500 in federal credits under IRA. Versus $3,750, just prior to that, which was on for a space of a number of weeks. Obviously better subsidy levels are good, and there's been kind of news that Panasonic wants to increase its battery manufacturing in the U.S. In the space of these recent days. But it appears there may have been the first detention of batteries coming into the U.S. under UFLPA, and that would be a major complication. And there's also,
what does that mean?
So, December 2021, UFLPA was passed. It handles the sensitive issue of forced labor in product content and certain Chinese regions. So it's the policy to exclude all products made with forced labor. And CBP only did their first enforcement in June of 22 for solar, right? My colleague Phil Shen did some really impeccable work around this. This looks like we now probably have our first enforcement action for batteries. And sort of the person raising the flag, his name is Richard Mujica. He was intimately involved in the first Chinese OEM to have this issue for U.S. customers.
We'll see. We'll see about all that. That's just one of those things that's up in the air. We'll see.
So, there's going to be a lot of changes. I don't know if it's good. I don't think this is. I think this is bad.
Craig, listen. When you come on with us, I always respect your obstinacy, but $85 price target still. I mean, what's got to happen for you to be right here?
I'm going to be right. So remember,
how do you know you're going to be right? What are you going to be right about? What?
So before he gets rolling here, just so everybody understands, because I know not everybody's been in the market a while, when you hear somebody have a price target, one of these analysts, basically it's almost always either a 1-year price target or a 6-month price target for a stock. Most times it's 1 year out. So this gentleman basically has this $85 price target, which I believe he's had on for quite a while now at this point in time, right? And so he believes that this is going to be an $85 stock very shortly. That's obviously a massive prediction. That's why he's pushing back, the host, right? That's why he's pushing back against this and saying, hey, man, you say this stock's going to 85. Is that 228? And it keeps rolling. Like, how we get there?
Tell me,
there's about 100 EVs that are coming to market this year, 100 new EV models, and they're going to pressure Tesla significantly into the back end of the year, just like we saw last year, right? Tesla's valued at a massive premium to Toyota, sells a tiny fraction of the vehicles. They don't have anything that Toyota doesn't already have, right? So what they have is...
Oh, geez, this gentleman just made literally the same exact points that bears have been making around Tesla for almost 10 years now at this point, but certainly 5 years. The competition's coming. every year since I started investing in Tesla a long time ago, I've had to hear the same exact thing. The competition's coming. Oh my gosh. And then, oh, they're valued high compared to these other guys. Oh, have we thought about this for a moment? Because there's something very important in regards to this whole, well, they're valued like, Toyota's this and GM's this and Ford's this. This is another one of those points I've heard for a million years now at this point in time, right? Have they thought about this for a moment? Maybe, just maybe, all those old car companies, the internal combustion engine companies, have to switch to EVs, and this is causing a massive disruption in their business model, and we don't know who's going to make it out of that bunch, who will be successful, who will be able to get to profitability. And if they are able to get to profitability, how profitable will they actually be? We considered all that, right? These are important subjects when an entire industry is being disrupted, okay? No different than if you were looking at BlackBerry back in the day when smartphones were coming around and like, well, this is a big disruption. How is this going to affect BlackBerry's business? These are things that are important to consider.
A focus exclusively on EVs. And they have a story around robo-taxis, but that story is nothing but a story. We're not seeing any taxis anytime soon. Other people could take as aggressive positions in the technology. I, like many, just find it a little bit scary when you have these apparitions in front of you causing false braking, in the FSD system. So, it's a story stock. It's a story stock. People love.
But the story's been out there for a really long.
I wish I could have went a little longer. Absolutely. Okay. Alrighty, next one up here. We've turned the corner on the earnings story. Looking forward to getting into this one.
ABC Capital Markets Head of U.S. Equity Strategy, Lori Calvasina. It's nice to see you, Lori, here at Post 9. Why the change?
So look, I've been out talking to investors for the last couple months, pretty much nonstop on the road. And, we go through the numbers. We're very data driven. And we felt like we had started to see a real turn in the earnings landscape. And so we upgraded our earnings estimate. Once we went through that model, it changed some of our target assumptions. Our multiple assumption didn't really change, but the earnings number helped push up some of the numbers in our modeling process. So I would say it was largely earnings driven. We are starting to see a recovery in the rate of upward revisions. You hit 57% upward revisions on the S&P last week. We've got broad participation by sectors. We think we've turned the corner on that earnings story. And it's funny, Sarah, I keep getting accused of being this wild bull, which is, kind of uncharted territory for me. Usually I'm the voice of caution. But we did feel like we wanted to communicate the story that we think the market move has been very rational. Some of our models point to upside to 4,400 to 4,600. So we wanted to really communicate that this has been a rational market. We're not big bears. We might overshoot our target a little bit, but, we do think valuations have gotten kind of close to where they need to be.
There's such a strong case, I think, for the bulls and for the bears now. We just had Bob Dahl on in the last hour from Crossmark, very cautious on earnings risk, says it's not priced into the market. If you look at leading indicators, for instance, this long streak signaling recession, the inverted yield curve, the liquidity issues, there's bound, the lagged effects of Fed policy, there's bound to be a hit to the economy, which is going to hurt earnings.
I think that what's surprising people a lot is both the resiliency of consumers and the resiliency of corporate America. I think the resiliency of corporate America, I think it's the Duke CFO survey has a great time series where they ask about the optimism on the economy and the optimism about your own company. In the last few years, the optimism on their own company has far outstripped the optimism on the economy. And it's a testament to the fact that management teams are really, really good at navigating crises. And you think of everything we've thrown at corporate America since the trade war, the pandemic, supply chains, inflation, Russia, Ukraine.
Let's go ahead. Let's take a look at a few different industries. Just bringing out a great point there about how these companies have performed during this time, right? I want to take a look at, so as far as the indexes go, Russell's having a great day, outstripping the market again. And that is something that a lot of the bears said, well, until, the Russell starts performing, it can't just be a few of the biggest NASDAQ stocks, right? And guess what? You're getting that story start to put together now because the Russell's starting to significantly outperform the NASDAQ here recently. VIX is up slightly. Commodities index up very slightly here today. Let's look at safety stocks. Safety stocks actually more Red Dead Redemption out there. Wow, Campbell's Soup down 7.5% here today. Holy smokers, that's no dang jokers for that stock, right? Let's take a peek at AI stocks. Almost all red across the board other than good old Tesla, Tesla here today. Banking, a lot of green out there for banking here today. Big tech. Ooh, Red Dead Redemption out there in big tech land, right? Tesla's the only one kind of doing decent. Netflix and Intel are trying to get a little green in the action. Look at Snowflake, big downward day, 6%. Intuit, that's a big day, downward day for Intuit there, over 5%. Yeah, definitely, some profit taken in big tech, no doubt about that. I want to take a look at housing stocks. Wow, housing stocks still rolling. A lot of these stocks are at all-time highs or around 52-week highs right now. Interesting. Housing stocks still rolling at this point in time. Oil and gas, everything. Pretty much green across the board out there here today in regards to oil and gas. Interesting. Okay. Semiconductors. What are the semis doing? Kind of a mixed bag in the semi world here today. Interesting. Alrighty. Well, that's the day in the market.
SVB, they've got some confidence, and I think they deserve it. And there's a psychological element to a recession that we all forget about. It's kind of like the snowball effect. Consumers get worried and scale back. Corporations get worried, and they start firing people. Well, guess what? They've got another lever they can pull right now, which is wage growth. And as we're seeing some of the labor market stats starting to deteriorate, you're seeing companies actually say, hey, the labor backdrop has gotten easier. So they don't have to go right away to firing people. Consumers have these great cushions. They don't have to get as scared either. And that throws, for people like me who model and are all about data, throws the models off.
Yeah, there's no doubt the cycle is definitely causing people to adjust the way it's playing out. You say, though, you think valuations are roughly where they should be, right? Your target is essentially where the market is at the moment, at least at the S&P level. I think the question really is, did we reset last year in terms of valuations, in terms of pricing in an earnings downturn, to the point where forward returns are really good, as they usually are after a bear market?
I think we did, and this is a big point of confusion on the street. Your average investor is going to say, we need to be trading at 15, 16 times. And I think that math works if you're looking at a model based on a post-financial crisis environment and you're using 10-year Treasury yields as the single variable that you're looking at. I have a model that, frankly, it goes back to 1962. It bakes in inflation, it bakes in the Fed, it bakes in 10-year, it bakes in GDP. And that long-term history and baking in that, sort of more angsty inflation rate environment of the 70s and 80s gives me a different number. So it gives me about 21.8 times. I tell people it's a compass. It's not a GPS. It's not a precision tool. But it tells me multiples can be meaningfully higher than where most people have assumed. And we got down to kind of a 16, 17 multiple at the October low last year. I think that was good enough. And now we're in expansion mode.
Yeah, two things here I want to cover before I wrap this video up. First one is I don't believe in looking back to the 60s or any past time periods to try to figure out where companies should be valued. At the end of the day, companies are so far different than companies in the past. Their profit margins are so much different. Their net margins are so much different. I don't think it even makes sense to look back at those past time periods and be like, this stock's valued at this, and that's for positive or for negative. And obviously in her situation, it's for positive, right? I still don't think it's worth even paying attention to. The way you should value companies today is very different than companies 50, 60, 70 years ago. They're vastly, vastly more advanced. That's the bottom line with that, okay? Second thing, how do I feel about earnings for the remainder of this year, okay? I feel extremely confident in certain companies and not so confident in other companies. For instance, there's specific companies, Amazon, Meta, NVIDIA, that I'm extremely confident we're going to see their earnings per share skyrocket this year. That are very big, impactful companies for the market. There's other companies out there that I'm not so sure about, as in Apple, right? Not so sure about Apple. And so it's really a case-by-case basis. Oil and gas stocks, I think their earnings can be respectable, but are they going to be as good as they were, in the second half of last year? I highly doubt that. So you're going to have a lot of moving parts here. Housing is booming right now still in terms of the home builders, at least, right? Not in terms of existing home sales, but in terms of the home builders. They're putting up record numbers right now and probably going to continue for the back half of this year. So it's a mixed bag out there, folks, okay? Stay focused, stay disciplined out there, build out your portfolios. GVD, remember GVD, growth, value, dividends. Appreciate everybody joining me as always. If you're looking to up your investing level and learn how to scale your portfolios up to much better levels, check out pinned comment down there. That'll be to apply to join my private group. Much love and have a great day.